Many people out there dream of having a home at some point in their life, so that way they can begin to build equity and increase their value of their net worth and stop having to write checks month to month, to a landlord or someone like that. But the problem is a lot of people out there feel like they don't qualify for a home because they have bad credit. With most people buying a home in their 20s and 30s, most people in this age range have a credit score below 700. So the question is it even possible to buy a home with bad credit? So I'm going to give some of my advice and personal experience on this topic, and hopefully that will help you on your journey to buying a home, or perhaps helping someone else on their journey buying a home. So the first step in all of this that I always recommend to people, especially people buying a home with bad credit, is to run a credit report. And that may seem inherently obvious, but the thing is there's kind of 2 points to this. One is that a lot of people that tend to have bad credit tend to not necessarily care too much to run a credit report. They feel like they know where their credit score is, and they know that it's lower than where they would like it to be. So why even run a credit report anyways? Because it's just going to remind them of past mistakes. The second point I feel like should be made is that a lot of people feel like there's not much value in running a credit report. They feel like, it's just going to tell them where their credit score is. It's not, there's no value in running it. But I would challenge that by saying, a couple of points actually. One, that, you have to understand where your credit score is to be able to improve it. The analogy I kind of like to make is if you're trying to lose weight and that's your overall goal, you have to have a starting point, right? It helps to, know where your weight is at, so that way you can know if you're making progress, if that's your goal. Same is true with the credit score. You can't really know if you're improving or not if you don't really know where you started off at. The other point I would make is that there's a really good chance that you have an error or mistake on your credit report. These things happen all the time where, there's a missed credit card payment out there that doesn't actually apply to you, or maybe it got misreported somehow, and you just have to dispute it. And then by disputing it, you get it removed on your credit report. So that's definitely a really easy way to boost your credit score, or maybe it's a lot lower than you think it is, and that's because there's these errors and mistakes made on your credit report. So it's definitely a thing to keep an eye on. Another quick point I wanted to make about all of this is don't get discouraged about a bad credit score. It's nothing to be embarrassed about. A lot of people end up having the same experience, and don't get discouraged about, trying to improve it. You'd be surprised about how easy it is to improve your credit score. And in fact, I pretty much can bet on anybody that if you had a bad credit score and you wanted to increase it by, let's just say 100 points, that's something that's pretty achievable within a year time frame. You can even boost your credit score in a shorter time frame than that. There are some tips and tricks on that, and I probably will do a video about that later on. But the whole point is that, a year is a short time frame when it comes to boosting your credit score, 100, 150 points, and that is definitely something that's achievable. While spending time improving your credit score may seem like a negative, it can actually be made into a positive. Think about it this way. Most people that are first-time home buyers are very surprised and shocked on how quick and fast the process really is to buying a home. They just want to, they start speaking with the realtor. They just want to go explore, 1 or 2 homes, just see what's out there. And the next thing they know, 3 months later, they're moving into a house. And so by having the specific time frame in mind of I need to improve my credit score for the next 6 months to a year long, that basically builds in this way for you to kind of slow down the home buying process. So I encourage people that are trying to improve their credit score to go out there and see, what homes really cost in your area, see what things you really like about homes. Is there a specific, feature in a home that you really like? So that way, when you are ready to move on buying a home, you already have a good understanding in your mind what you want. But at the end of the day, I don't necessarily want to sugarcoat it either. If you have a bad credit score, you are going to pay more in the form of a higher interest rate. Whereas someone with a good credit score may, be able to afford a 3% on their interest for their mortgage, you're probably going to end up having 4 or 5% if you have bad credit. And then on top of that, that also means you're going to end up having, only being able to afford a cheaper home. For perspective, and this is just an example here, so not everything will be perfect, but a person making $50,000 with bad credit, so low 600 point range, could afford a house probably around $150,000. But someone with a good credit score, so in the 700 point range, and the same income, everything else still remains the same, would be able to afford a house that's $170,000. So that's a difference of about $20,000, but that difference only increases as you're talking about more expensive homes. But don't necessarily be discouraged about all this. It still is possible to buy a home with bad credit. And on top of that, you can turn it into motivation and as a reason to improve your credit score. And before I go any further as far as to answering the real question on how to buy a home with bad credit, I at least want to acknowledge that anybody that has a credit score below 500 points, isn't going to be able to qualify for any mortgage, except there are a few special exceptions, but I'll explain that at the end of the video. But in general, it's pretty much impossible to buy a home with a very low credit score, like below 500 points. So if you have a credit score, above 500, you're in luck, and ranging all the way from 700 points. But that is still going to be dependent on a few factors. Some of these factors will include things: how much you make, so your income, how much debt you have, and how much you're paying on that minimum payment. And on top of that, whether or not, you've had long-term employment, or maybe you're just, working a job that's based on commission. These are all kind of things that are calculated on the overall risk factors that you have. So the most common way that a person ends up buying a home with a bad credit score is through an FHA loan, or Federal Housing Administration loan. That's kind of a mouthful, but most people refer to it as an FHA loan. You see, these loans are specifically designed for people with a moderate income or low income that typically have a bad credit score. An FHA loan is a mortgage issued by an approved lender or bank, but instead of your lender taking all the risk, there's less risk because the federal administration will pay the lender if you default on the loan. Now, these banks don't necessarily have to worry too much about being able to recoup their money, which obviously for a bank is a pretty big deal. So now they have less risk, so now they're willing to lend out more to these people with low credit scores. And typically for an FHA loan, you have to have a credit score of 580 points or higher, and you should expect to put down about 3.5%. So on a $200,000 home, that's about $7,000. And if you have a credit score of below 580 points, but it's at least above 500 points, then you could still apply for an FHA loan and still may be able to qualify. But the main exception here is that you should expect to put down about 10% for a loan. So on a $200,000 house, that's going to be $20,000, which for most people, that's a significant amount that may be tough to actually be able to come by. But at least, this really specifically, is a good deal for people that, made mistakes in their past, that they're still, maybe they had a bunch of credit cards that they didn't necessarily end up paying off, but now they're in a situation where they're a high income earner. This may be a perfect solution for them. So this is all sounding great and all, but there's got to be a catch to all of this. There's got to be some kind of cost. The catch is you got to smash that like button for me. But in all seriousness, if you want to give it a thumbs up to show appreciation for the amount of research I did into this video, I'd appreciate it a lot. And hopefully you can give it a share too to someone that actually may benefit from this video, that may have bad credit and may not necessarily think they can afford a home. But unfortunately, yes, there actually is a cost to all of this. You see, on a conventional or normal loan where you have a good credit score, if you didn't put 20% down on a home, you'd have to pay the special insurance that's private mortgage insurance. So on a $200,000 home, that would be a $125 payment, all the way up to a $300 payment for this private mortgage insurance. And that insurance doesn't really benefit you at all. That insurance just guarantees to the lender that if you default on the loan, they have some insurance to recoup that value. That mortgage insurance would only last, though, until the loan to value ratio dropped below 80%. So for example, on a $200,000 home, if all you owed was $160,000 or less, then that private mortgage insurance could be removed. But with an FHA loan, which is a type of loan you would qualify with bad credit, there's a special private mortgage insurance, and that's known as a mortgage insurance premium, and it works a little bit differently. And there's usually two parts to the special insurance, one being this upfront fee, and usually that's about 2%. So on a $200,000 home, you're paying $4,000 upfront for this, insurance that, once again, doesn't necessarily benefit you. And so that can be a huge cost. But fortunately, though, sometimes this insurance, this upfront cost anyways, can be rolled into the loan. And on top of that, the second part in all of this is that you end up paying this annual fee that you usually end up paying monthly. So on a $200,000 home, you're paying this $150 fee every month on top of that $4,000 upfront cost. So that can be a huge, problem to swallow for a lot of people, and they don't necessarily want to go through with that. But the other problem with all of this is that on a conventional loan where you could get private mortgage insurance removed at some point, for an FHA loan, this special insurance, it's actually not as easy to remove. And usually you end up paying it either for the life of the loan, or at the very least, you end up paying it for half of the life of the loan. So, on a 30-year mortgage, you're paying $150 for 15 years, or sometimes even 30 years. And so that's a lot of money being sunk into this house. I may have discouraged a lot of people out there on getting an FHA loan, but that's not necessarily my intent. There still is hope out there. For example, if your financial situation kind of changes down the road, everybody gets a better job, hopefully anyways, 5-10 years down the road, and hopefully you have a lot more in savings. you may be able to refinance that loan and get a whole entire different, type of mortgage altogether. So that way you're not necessarily paying $150 per month. And this is especially beneficial if, the FHA loan has a higher interest rate than the conventional loan that you're refinancing into. And yes, you would have to pay upfront costs as far as these closing costs for, a new mortgage. But usually it's still pretty beneficial, because if you think about a $150 payment, for the next 20 years or 15 years, usually you can justify on refinancing that loan. And on top of all this, even if you do get a home that has an FHA loan and you're not necessarily planning on refinancing, there's a pretty good chance that you're going to end up moving out anyways before you end up completely paying off this mortgage altogether. And a lot can change in 7 years. You could end up moving to a cheaper cost of living area. You could end up getting a better job. There's so many big financial, things that can happen in your life over the course of 7 years. So I don't necessarily think it should be too much of a burden or discourage too many people to get an FHA loan for a home that they may just live in for 7 years. The other reason I don't necessarily think people should be too discouraged as far as getting an FHA loan, just because they have bad credit, is because I believe people that are watching this video are probably people that are, really motivated to improve their finances. And having a home is a good way to build wealth. You're building equity. And on top of that, you're not necessarily, burdened to a landlord. If you have a garbage disposal go out, for example, you're not necessarily waiting on the landlord. These are improvements and things you can take care of yourself. And so there's kind of also this learning curve to having a home as well. So that way, when you do kind of end up qualifying for a conventional loan and moving into your final destination or whatever your home, the next home you're going to live in is at, you already have these skill set built to, maintain your home. You know what to look out for. So I don't necessarily think people should be too discouraged on having an FHA loan. Plus, by having your own house, you finally are in charge of that thermostat. You don't necessarily have to worry about parents or somebody else being in charge of that thermostat anymore. But probably the best advice I could give to anybody out there as far as that's interested in buying a home but has bad credit or doesn't necessarily know how they would approach buying a home is to just go out there and start talking to banks or different mortgage officers and start asking questions. But at the same time, I would give a huge caution and understand that everybody in the industry has an incentive to push you through into buying a home that, is at the top of your budget and, make that process as quick as possible. So definitely be, a little cautious about that. But obviously these people are the experts in the industry and they know better than anybody. The mortgage industry and the whole, real estate industry is always changing. So obviously these people know and keep up to date on that information. So that's probably your best resource. Now, before I end this video, I at least wanted to mention these two special mortgages that you may be able to qualify even if you have a bad credit score. And maybe they don't necessarily apply to you, but maybe you end up bumping into somebody or have a friend that is in a situation but may actually end up qualifying for these special mortgages that I'm about to talk about. The first one in all of this is a VA loan, which is a Veteran Affairs loan, and that is for people that are active duty members of the military or that they were veterans of the military. So that can definitely be a really good option. And with these loans, a really good benefit is that you don't necessarily have to put any money down at all. And so that's a really big, huge help. And on top of that, they're offered to qualified members of the military. On top of that, their spouses, as well as sometimes in special cases, they're offered to people who are widowed, where their spouse or their spouse that had passed away was an active duty member of the military. And the other loan I wanted to mention is a USDA loan, and that usually benefits people that live in rural areas. So, if you don't necessarily, if you live in a farm or something like that, that may be an option to at least consider. But both of these loans, you're going to at least have to have a credit score of at least 620 or above. But the really great thing about both these loans is that you don't necessarily have to put money down. So now that you have a ton of knowledge on how to qualify for a mortgage with bad credit score, or, hopefully you find this information useful, but, even if not, hopefully you can end up helping somebody else out there qualify for a mortgage that does have bad credit score, because that's typically an instance where people just kind of feel helpless. So if you can end up helping that person out by the knowledge gained in this video, that's a great win for me and that's a great win for you. So if you appreciate this video at all, please give it a thumbs up. I would appreciate it a lot and be more than grateful. And if you like personal finance, business, economics, or anything like that, please hit that subscribe button so you can stay tuned for more.